You know, there's a new kind of arms race heating up on Wall Street, but this one has nothing to do with stocks or bonds. We're talking about publicly traded companies buying digital assets, and not just a little bit, but by the billions, making it a core part of their strategy. This isn't just some simple investment either. It is a high-stakes war of strategy. And today we are diving deep into the two titans leading the charge.
Okay, so let's get right into it. How do you actually build a crypto treasury worth billions of dollars? Well, at the heart of this whole thing are two companies with two completely different philosophies. On one side, you have the pioneer, the one that started it all, MicroStrategy. And on the other, you've got this newer, incredibly aggressive challenger, BMNR. Both of them are piling up massive amounts of digital assets. But how they're doing it? Well, they couldn't be more different.
To really get a grip on this digital treasury war, we first need to break down the two models that have really sprung up here. One is, let's call it a pure financial play. The other is a super complex operational machine. Let's see how they really stack up against each other.
And here you have it, side by side. It's so simple, yet so different. MicroStrategy has basically perfected what we're calling the finance engine. It's a simple, powerful loop. Raise money, buy Bitcoin. That's it. But BMNR, they've introduced this really fascinating evolution, the yield factory. This is a model that doesn't just buy an asset and hold it, it actually puts that asset to work.
Now, what's so interesting here is just the sheer, almost brutal focus of MicroStrategy's model. I mean, it is a relentless, single-purpose machine. Its only job is to go out to the capital markets, raise money through debt or new stock offerings, and turn every single dollar they can into Bitcoin. And the asset itself, BTC, it doesn't pay you anything. No dividend, no interest. Its value is purely in the hope that its price goes up.
BMNR, on the other hand, they came along and asked a totally different question. They said, what if the asset we own could actually generate its own cash flow? Their whole model is built on Ethereum, which has this feature called staking. So by participating in securing the network, BMNR earns a yield, basically a recurring revenue stream that gets paid to them in, you guessed it, more ETH. This adds this really complex, but, potentially powerful operational layer on top of just hold it.
So that's the theory, right? A fascinating idea. But how does it actually look in practice? Well, BMNR didn't just dream this model up, they executed it with a speed and aggression that is just almost unbelievable. The data behind how they accumulated their assets tells a pretty stunning story.
And this timeline just shows you the velocity we're talking about. It all kicked off at the end of June 2025 with an announcement. By the end of August, just 2 months later, they had almost 1.9 million ETH. Fast forward another 3 months, and that number had literally doubled. And by March of 2026, they were sitting on over 4.5 million ETH. So we're talking about going from zero to a multi-billion-dollar treasury in a little over 8 months. It's just wild.
So how on earth did they do it? I mean, this chart just shows that explosive growth. The answer is simple: relentlessly, aggressively raising capital. In just the 1 quarter ending in November 2025, BMNR used what's called an at-the-market facility to raise over 7.6 times billion dollars. They did that by just issuing new shares, and then they immediately turned around and converted all of it into ETH.
Let's just stop and put that accumulation into perspective for a second. As of early March 2026, one single public company, BMNR, held nearly 4% of the entire circulating supply of Ethereum. And this isn't an accident. This is a core part of their stated vision, a goal they call the alchemy of 5%, where they're aiming to eventually control 5% of all ETH in existence.
Okay, so this is the crucial point, right? With all these assets being bought and all these new shares being printed, how do you even begin to figure out what the company is actually worth on a per-share basis? Well, the key metric here, the one you've got to understand, is net asset value, or NAV.
The easiest way to think about NAV per share is to think of it as the breakup value, right? If you took all the company's ETH, all its cash, used it to pay off all its debts, and then divided whatever was left by the number of shares out there, that's your NAV. It's the baseline. It's what investors use to figure out if the stock is trading at a premium, so above its asset value, or maybe at a discount.
Okay, now this table is probably the most practical, nuts and bolts takeaway from this whole breakdown. It literally maps BMNR's estimated NAV per share directly to the price of Ethereum. So you can see if ETH is at $2,000, the underlying value per share is about $22.60. But if ETH jumps to $5,000, that NAV leaps to over $52 a share. This is the fundamental math that investors are using to try and value this company.
This all sounds incredibly ambitious, almost too good to be true, doesn't it? So you have to ask, what's the catch? Because nothing, especially in finance, comes for free. Every new corporate model, every cool innovation, it comes with a brand new set of risks and trade-offs. So let's break those down for both of these companies.
For BMNR, all the risks are basically tied directly to how complex their yield factory is. First, you've got huge regulatory risk from agencies like the SEC, who are looking very closely at staking. Then there's technical risk. If their systems go offline or make a mistake, they can actually be penalized by the Ethereum network itself. The company has also straight up admitted to material weaknesses in its own financial controls. And, of course, there's the constant dilution of shareholders to keep funding these massive purchases.
MicroStrategy's risks, well, they're a little different. They're more purely financial. They have used over $8.2 billion in debt to fund their Bitcoin buys. That is a massive amount of leverage. And remember, their Bitcoin doesn't generate any cash flow, so they have no cash coming from the asset to pay the interest on all that debt. Their entire strategy really depends on being able to keep tapping the markets for more money and ultimately on the price of Bitcoin just continuing to go up.
So when you boil it all down, it really comes to this. These two companies, they're offering two fundamentally different things. With MicroStrategy, you're getting a highly leveraged, pure-play bet on the future price of Bitcoin. With BMNR, you're buying a stake in a very complex operational machine that's designed to accumulate and generate yield from Ethereum.
And that leaves us with one final and I think really crucial question to think about. When you invest in one of these companies, what are you really buying? Are you just getting exposure to the underlying digital asset, or are you betting on the unique corporate machine with all of its advantages and all of its risks that has been built specifically to acquire it? How you answer that question might just determine who wins this new digital treasury war.